we don't need to accelerate in order for the price to go much higher. If we keep the same pace of inflows, the price is going to go much higher, because I think we've already worked through most of the old sellers. I think most of who wanted to sell already did. Not everyone, but I think most who wanted to sell at these levels already did. So you don't need like to accelerate. You don't need like to the inflows to double or 10x in order for price to go much higher. In fact, if everything stays the same, we probably just go much higher just based on that.
Hi everyone, welcome to Unchained, your no-hype resource for all things crypto. I'm your host, Laura Shin. We love featuring listener comments on the show. Today we have one from Jade Herrick, responding to my recent interview with Circle's Dante Disparte on the passage of the Genius Act and why it might be too conservative for banks. On X, Jade said, "Banks often resist regulation until they see competitors gaining advantage. Then suddenly they want it. I've seen this pattern repeatedly in fintech." If you want your comment featured, write a review of the podcast overall or leave a comment on our video on YouTube, Farcaster, or X. This is the July 22nd, 2025 episode of Unchained. One early Bitcoiner sold 30,000 BTC too soon, missing out on over $1 billion. Don't want to make the same mistake? With Xapo Bank, eligible members can get instant cash without selling their Bitcoin. Check out xapobank.com/unchained for more. Ledn is a leading platform for Bitcoin-backed loans, offering a secure and transparent way to unlock liquidity without selling your Bitcoin. Issuing loans since 2018 and earning over 1,000 Trustpilot reviews. Learn more at ledn.io. Mantle is pioneering blockchain for banking, a revolutionary new category at the intersection of TradFi and Web3. Follow Mantle_official to learn more. Today's guest is Udi Wertheimer, longtime Bitcoin advocate and customer support intern at Taproot Wizards. Welcome, Udi.
Yep, that's me. Hey.
Hey, excited to have you. So Udi, you wrote an essay on X recently called "This Bitcoin Thesis Will Retire Your Bloodline." Very catchy title. You started it by saying, "I believe Bitcoin is entering a generational run the likes of which we've never seen." And you gave an example of a coin that had experienced something similar to what you believe we're on the precipice of experiencing with Bitcoin. So go ahead and explain what you mean.
Yeah, so I based on all the market data that I've seen, based on just the behavior of Bitcoin price action this last cycle, I think we're at the very end, the tail end of a rotation of old holders out of the Bitcoin asset. And what that means is there's obviously there's a lot of people who got Bitcoin early, and I remember when I got into Bitcoin, we used to joke, me and my friends, that Bitcoin will either go to $10,000 or to zero. And if it goes to $10,000, we'll be very happy, right? And 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 here we are today at 100,000. I think similarly to 10K. I think 100K is this number where a lot of people are just like, yeah, I'm out. I'm done. That's enough. I don't need more billions of dollars, and I'm just out of here. And I think we've seen that. I think we've seen there's been a big one just last week that that has been in the headlines a lot. There's a mysterious 80,000 BTC whale that is presumably selling their Bitcoin. We don't know if they're done selling, and if I had to guess, probably not. But the point is, a lot of old whales are waking up and selling their Bitcoin, and yet, you know, price is going up, not down, right? So, and another way to look at it is to look at the inflows into Bitcoin and just say, well, okay, there's billions of dollars that are going in every week into Bitcoin. And for this longest period of time, price didn't actually move upwards that much either, right? Like we've been stuck in this range of 70 to 100K for quite a long time. And that means that someone has been selling, because we know that a lot of people, we know that we have the data. That's something that we didn't have in the past, but we have very clear data of Sailor accumulating, a lot of those newer Bitcoin treasury companies accumulating, the ETFs. We're seeing there's a ton of inflows and very little outflows. So we have that data. We know that they're sucking up all the Bitcoin, yet this price stays within that range, or stayed within that range. And I think that just means we had a lot of sellers. And I think to me, it seems like we're almost almost out of sellers in that range. People who didn't sell at 100K are not going to sell at 130, I don't think. So I think there's going to be like this massive run up, but it's hard to imagine, right? Like it's like, what am I saying here? Like, we're talking about inflows and numbers and whatever, but it's hard to imagine. And I think a similar thing happened with Dogecoin a few years ago, and that's maybe something that I think a lot of crypto natives that have been around for more than 3 4 years would remember. Dogecoin was crazy in 2021, right? Like all of us all of us were amazed. I'm sure you remember it. Like it seemed like it's almost out of the blue. One day, all of a sudden, Doge goes up 10x and that's 10x in size, right? We're not talking about one of these small shit coins. It's a big coin, goes 10x within like 2 3 weeks, and then again a couple of months later, which is just it was just unheard of. And I think the reason that happened was the crypto natives didn't notice that Doge was being accumulated by basically a completely new breed of people, a completely new cohort of holders for a long time. That took over a year. If I remember correctly, I think it was in 2019, I think that Elon Musk tweeted about Doge for the first time. And, I don't know if people understand. Today we see Doge as this obvious king of meme coins. Every meme coin wants to be like Doge, right? And everyone knows this is the biggest meme coin. But at the time, I think there were very few people who are crypto native who saw Dogecoin as a thing that has a future. It was always kind of a joke and something that you would trade up and down in order to accumulate more dollars or more Bitcoin or whatever it is. I don't think anyone took it very seriously. And it's obviously it's a joke today too, but it's a joke that people take more seriously now. And when Elon Musk shows up and says, "Yeah, I think Dogecoin is my favorite cryptocurrency," or something along those lines, I think most of crypto people look at that and they say, "Okay, that's amazing. That's Elon Musk talking about our meme." And so they do a little. There's a little pump, like it goes up like 50% or whatever, and everyone is excited, and people think, "Oh, I made it," and and then they continue selling because okay, it was a joke, nice. But it turns out that since Elon did that, and a lot of attention from normies kind of shifted to Dogecoin, there's been like this whole year where basically a bunch of TikTok people, and TikTok is getting much more popular in 2020, right? A bunch of TikTok people realized that Dogecoin is available on Robinhood. At the time, there were very few coins on Robinhood. There was Bitcoin and Ethereum and Litecoin and I don't know, Ethereum Classic, a bunch of boring coins. And Dogecoin is the only one that's like interesting. And TikTok dancers realize that there's something that they can buy that it's cool and Elon likes it and it's funny and that the crypto people keep selling it.
Yeah, and
Right.
just as a reminder to the audience, like this was also, of course, the period where Robinhood was super popular was the pandemic, and they were the GameStop trade was going on, AMC, like all those things.
So yeah, it's true. There's all these all these guys are on Robinhood trading all of the meme stocks, and they realize that they can trade meme coins too, or one meme coin. And at the time they started, they called it the Dogecoin Challenge on TikTok, which was basically people were supposed to share screenshots of themselves buying Doge and then singing songs about how it's going to $1. And and us on crypto Twitter and crypto native funds and whatever, we were just not paying attention to any of this. We didn't know what was going on at the time. I don't think I don't think crypto natives were paying attention to TikTok, period. I don't think we were paying a lot of attention to Robinhood and meme stocks. There was obviously we all knew what was going on. Obviously, people were trying to shill Bitcoin to people who are buying GameStop. It was going, but it was kind of two different worlds. And so for this entirety of this full 12 months since Elon first like talks about it, apparently TikTok kids and retail keeps buying Dogecoin for the entire time. And the price doesn't move because crypto natives keep selling it. We don't we're not we don't understand what's going on. We just keep selling it. And eventually, obviously, around the same time that Bitcoin hits a new all-time high, I think end of 2020 or the beginning of 21, Obviously, a lot of coins run up, but Doge has this explosive move that nobody was expecting, or for 10x in basically a couple of weeks, and nobody understands how is that possible. Like how did that happen? And the reason it happened is because we were just out of literally all of the old holders sold.
Yeah, and by the way, that also was like Doge at that point was less than a penny. It was zero point 0.8
Hmm.
cents, and then it spiked up to 8 cents. So
Yep.
these are, yeah, the numbers are wild.
Yep. So spikes, and if we're talking about market caps, that's 1 billion to 10 billion in a couple of weeks. At the time, a billion was considered a lot in crypto, right? Like at the time, a billion was one of the big ones. But the real crazy stuff is a few months later it does another 10x, right? Then we go from 10 billion to 100 billion, because what happens is after you have this, and in the article I call it the first mind fuck. After you have the first time that everyone's kind of gets shaken and realizes that other people were accumulating the coin for this entire time. Once you realize that, you think that it's over, right? Your first instinct is to assume that you missed it, but really, and we've seen a lot of people when the first run up was happening. We've seen a lot of people kind of doing, bragging about trades of 2x and 3x on Doge, not realizing that this thing is going to actually moon again. The other thing that was really interesting about it was all those kids buying up Doge on Robinhood didn't really have a concept of the history of the price chart. They were not anchored to old prices. Well, for one reason, because obviously they weren't looking at it at the time. Two, they weren't necessarily able to see it, because when you look at your Robinhood app, it doesn't go as far back as we PTSD ridden crypto natives remember. Now
Yeah,
we
actually, and just to like you, one other thing I wanted to mention there was like you wrote in your piece that the OG crypto people were like their anchor was the old Doge prices of like less than a penny, and you said everyone knew this. If it briefly goes up above a cent, that's a bubble. We use that to stack more stable coins, and we leave.
Yep. Yeah. And that's what everyone thought. And we used to have these charts about how we expect, Doge to go up 5x and then we sell. And that was that was everyone was expecting. And everyone did that successfully for multiple cycles, right? So when it happened the next time, that's what everyone expected again. What's interesting with Bitcoin today is people who are getting Bitcoin exposure, the new people who are getting Bitcoin exposure. We're not talking about retail meme traders, right? We're talking about mostly institutions, and they're buying it through IBIT, or through IBIT is the BlackRock
BlackRock
Bitcoin
ETF.
ETF,
Yeah.
or they buy MicroStrategy or some of the other Bitcoin treasury plays. Um, so they don't see the past either on their charts, right? If you buy IBIT today, I think it's, I don't know, about $65 per IBIT, right? That doesn't sound too much. It doesn't sound crazy. 65 to 150 doesn't sound like a crazy thing to me. That happens all the time. So I think a lot of the and when you buy the ETF and you look at the chart, you don't see it going up from, you know, half a cent to to 65. It got listed at 30 and now it's 65. It seems perfectly reasonable to expect that, another 2x in a few months is completely normal. So um I think we're actually set up in a very similar place. A lot of old holders have sold over time. By the way, I think you and I, Laura, have been talking about Bitcoin maxis before on a few episodes in the past, and I think you'll notice they're a lot more quiet this time around. You don't see as much of them as you used to, and some of it is, whatever, they moved on to I don't know, do other things, but I think a lot of them retired and left. I think a lot of them sold. I think it's pretty clear,
Yeah,
that.
but before we keep talking about Bitcoin, can you
Oh yeah,
finish the Dogecoin story? Because we need that context for the Bitcoin
yeah. So
hypothesis.
so really, with Doge, that really was of course, the end of it was the final the so-called second mind fuck from 10 billion to 100 billion, from like 8 cents to 60 or whatever it was. The peak was, I think, Elon Musk going on Saturday Night Live. And by the way, I'm not at all convinced that's the end of those. I think we,
Yeah, it was 70 cents. But yeah, keep going.
but like that was obviously, those completed 100x in, I don't know, 3-4 months. That was pretty heated, and of course it was going to take it a while to recover, which it might do again soon. But I think the point is, it exceeded everyone's expectations wildly. People Crypto people had the opportunity twice, basically, to see what's going on, get in on the wave, but they assumed that, just like every other time, this is going to end badly. And basically, all of us sold all of our coins to retail people. That's basically what happened. And they made a whole lot of money. Of course, some of them got in very late and did not make a whole lot of money. But we basically sold them all of our coins very early. And I think that's it. That's basically the end of the story. And I think we're doing the same with Bitcoin now. I think we have been for the last 3 months or so. I think people have convinced themselves that 100K is what Bitcoin is. Like it's and if things get very bullish, then maybe it'll go up another 10-20%.
I don't think it's that they think it's all that is. I think it's that they've made so much money that they don't really have a need to, to hang on to it
Sure, yeah,
much
that too.
longer.
Yeah, yeah.
If we look at the Adam Back deal, the new Bitcoin treasury company, the Bitcoin Standard treasury company that he's doing, there's a lot of speculation that that's who was selling the 80,000 BTC, the whale. And
I think that's unlikely. By the way, we
oh,
can talk about that,
oh,
but I think
okay.
it's unlikely.
Well, you know what?
Maybe.
We'll take a quick word from the sponsors, and then we can pick up with that. Selling your Bitcoin just to get cash? One early Bitcoiner did and missed out on over $1 billion. With Xapo Bank, you can access up to $1 million instantly without selling a single sat. Eligible Xapo Bank members can borrow up to 40% of their Bitcoin's value. No stress, no selling, no buying back in. Use it for what matters most: your dream home, your child's education, a getaway, or that can't-miss investment. With Bitcoin-backed loans, you're in control. Set your installments and repay in Bitcoin or US dollars, your choice. Enjoy competitive rates, zero fees, flexible terms, and no penalties for early repayment. And your Bitcoin stays safe, never rehypothecated, relent, or pooled. It's securely held until your loan is repaid. Check them out at zapobank.com/unchained. Wish you could access cash without selling your Bitcoin? Ledn makes that possible. The global leader in Bitcoin-backed lending, Ledn has issued over $9 billion in loans since 2018 and never lost a single Satoshi of client assets. Why is a Ledn loan different? With custodied loans, collateral is not lent out to generate interest. No credit checks, funds in less than 12 hours, no monthly payments. Repay whenever you want, with zero penalties. And proof of reserves reports, verified by a top accounting firm, are published every 6 months. Ledn gives Bitcoin holders a secure, transparent way to unlock liquidity without selling. Learn more at ledn.io. That's LEDN.io. Mantle leads the establishment of blockchain for banking as the next frontier. UR is the access layer that transforms Mantle Network into a purpose-built vertical platform, the blockchain for banking, that enables financial services on-chain. UR unifies and vertically aligns Mantle's focus on payments, trading, and assets. MI4, METH protocol, functions FBTC, supported by developer grants, ecosystem incentives, and the industry-leading distribution platform through the UR app, Reward Station, and Bybit Launch Pool. All economic activity within UR will be captured by Mantle Network to further drive value to token holders and establish its significance in blockchain for banking. Follow Mantle_official to learn more. Here's another comment responding to the recent episode about the Genius Act. On YouTube, My Name is B. Maya said, "When it comes to a law such as this, to be fair, the people should prioritize freedom. What is money without freedom? And that does not exist with the Genius Act, considering the central bank digital currencies. The other problem is if there was ever a need to reset, there are no safeguards against protecting the people. If such a law exists, the bankers should pick up the tab and not the people, unlike what transpired in 2008. Again, if you want your comment featured on Unchained, please write a review or leave a comment on an episode on YouTube, Farcaster, or X. Back to my conversation with Udi. So let's dive into the Bitcoin piece, and if you want to address that bit about the Atom Back Treasury Company, Bitcoin Standard Treasury Company, you can do that. But we should really let's talk about your Bitcoin thesis.
Yeah. So essentially, I really think that Bitcoin is setting up in the same way the Doge was before, and people are maybe going to look at this on a kind of daily time frame, but I think bigger picture, I think similarly to the course that Doge was taking, I think we're almost out of Bitcoin sellers. I think that over the last 6 months, I think most people were just not paying attention to the fact that, for example, I think over the last week, literally 7 days, I think literally over the 7 days, a lot of people starting to understand that treasury play better because Ethereum companies have started doing that. And I think a lot of people have paid attention to that. So I think people start to understand the flywheel that was going on there.
Wait,
But you need to.
I'm so confused when you said that for the last 6 months, you feel like people haven't been paying attention. I actually feel like post-election, there's been way more people, like not just crypto people. So
I'll explain
I don't
what
know
I
what
mean.
what did you mean by that?
I'll explain what I mean. So I think a lot of people could not, over the last 6 months, explain how MicroStrategy works. Like, how does it work? How does Saylor keep showing up with more money? How does he keep buying up more Bitcoin? What are the risks? What are the benefits of that strategy? I think most people could not explain. I think most people just assumed, oh, he's crazy, he has some cash under the bed and he buys Bitcoin with it, and that's it. And I think that's the length of how much attention people were paying to it. And
Cash under
every
the
week,
bed.
yeah, but it seemed like that's, because, for example, I think a lot of people did not notice that MicroStrategy stock was up like what, 20x in the last cycle. That's something that people only realized very recently. And I think partly because of the ETH treasury plays, I think people are starting to understand how this works, because you're seeing there's a lot more people in crypto that are now getting involved in the treasury plays. So I think they understand what happens there more than they used to. But for the vast majority of, let's say, up until a month ago, maybe a month or two ago, I don't think anyone understood. Not anyone, but I think most crypto native, including sophisticated investors, and I talk to sophisticated investors a lot, I don't think they understood what was going on there. I don't think they were paying attention.
I mean, actually, what you're saying there reminds me about how so much of CT and you're right, like really smart people in crypto were discounting the Circle IPO and saying like this is not going to, do well. Like their business model is this and that. Like they pay like Coinbase takes more than half their revenue. Like all these things, which I the truth is I probably agree with them somewhat. But I think what crypto people didn't understand was the limited ways that TradFi can get crypto exposure, and how we're at this moment where TradFi is interested, and for that reason, it creates this situation where anything that can be sold to the public markets will have a little bit of this bubble activity. And so you're right. I think a lot of OG crypto people missed that. But yeah, Circle was probably the first clue.
Yeah. I think it was a pretty strong clue. Yeah, and I think from there, I think more people started paying attention. Saylor, Saylor has been around since 2020, right? He's been buying Bitcoin since then, and I think a lot of people put him in that box, myself included, of just like a Bitcoin maximalist podcaster. But over time, the strategy that he's running became extremely successful, and I think most of crypto natives just completely discounted. Like I think never even looked at the numbers up until maybe a month ago. And what that means is, for that entire time, people didn't really realize that that someone's buying up Wall Street basically is buying up all the bitcoins. Because we were just not paying attention to it, and so I do think that a lot of people are underexposed because they didn't realize that we're going to run out, quite literally run out of Bitcoin. And the thing with and again, that's something that I think if people are starting to notice too in the last week, this strategy is very reflexive. People used to assume, well, if Saylor and the ETFs they keep buying Bitcoin, eventually people are going to run out of money. But no, it's the other way around. The more they buy, the higher the price goes, the more capital they can raise. And of course, one day that will end. But I don't think we're particularly close to that. The rate at which they're buying up Bitcoin just keeps increasing. And if I'm right that this is similar to Doge in the sense that crypto natives have been kind of asleep at the wheel for the last year, and essentially has been, either selling or at least not buying up Bitcoin for the last year, that means, what's going to happen is pretty similar. Most people are, one, underexposed. Two, there's not that many left that are willing to sell because a lot of the new buyers have bought, whatever, 20% ago, 30% ago. They're not looking to sell yet. So we've got this rotation where we have new holders, new buyers, and the new holders, unlike old holders, the new holders keep buying more. That's, by the way, another thing that I think we haven't had enough, not enough, sorry, we haven't had before, just structurally. We always had in crypto forced sellers. Those are people who are forced to sell Bitcoin. SBF, a famous example, that have, 3AC, Luna, a bunch of these guys that blew up and had to sell.
Yeah, or even like miners.
And to an extent, miners, if they're not too leveraged, they might have some flexibility. But we had a lot of players who are very leveraged, and basically, one day they wake up, they have to puke all their Bitcoins into the market. And again, this might happen one day with this scheme too. I just don't think we're very close to that. But my point is, for the first time, we have forced buyers. By forced buyers, what I mean is, Saylor cannot choose to not buy Bitcoin next month. That is not an option he has. He has to keep buying. MicroStrategy has to keep buying Bitcoin, because that's what the company does. The company has no right to exist otherwise. All of those other Bitcoin treasury companies are in the same situation, maybe even more. They have to keep buying Bitcoin. They have to keep coming up with ways to get more capital, to get more Bitcoin. And there's a lot of capital in the world. So if the bet is that they're going to run out of capital they can raise like next week, I really doubt that. I don't think we're anywhere near that.
Yeah, I mean, we're not near that, but it could happen. One thing I wanted to say earlier too about this dichotomy between how CT views things versus like how other markets view them is just, the CT way of viewing how MicroStrategy buys is, why do they always buy when the price is high? Why don't they wait for the dips? Why don't they buy when the price is low? Like it's so clear they don't understand like what
Yeah.
creates the demand and like when he's able to purchase. And it is when the price is high that he's able to get investors. And so that's why it's like it is the opposite mindset, and not only the opposite, but it's so true that we're at this phase where like a lot of ways that CT or just crypto OGs have thought about accumulating is it's flipped on its head in the public markets.
Yeah. Yeah. And even in the resolution, there's another little clue, which is, even when you look on a weekly basis, right? Saylor and a lot of these other companies, they would post every week on Monday the purchases they made last week, and like you said, it tends to be at the top, right? Like people would always make fun. Why is he buying at the top? There was like, for the entire week, there's so many other opportunities to buy, and he buys the top. Well, the reason he's buying the top, he's buying all the time, right? He buys all the time. But at the top, like you say, it's easier for him to raise capital, but also the sellers are at the top, right? So most of the volume, the trading volume, ends up being at the top because he keeps generating more demand. and when sellers come in, they create the top, and that's why you see. But Sailor is that is the other thing that I think people need to understand. Sailor and all these other companies, they're insensitive to what the Bitcoin price is. In their mind, I'm gonna deploy 100 million this week. I'm gonna deploy 500 million this week, whatever it is. It doesn't matter what the Bitcoin price is. They're just deploying the cash that they can get, and that's just a new form of buyer that we didn't have before. A buyer that's completely insensitive to price. They're not thinking, oh, 100K is high, six figures is a lot. No, no, none of them are thinking that. They're just thinking we have cash. We need to use that cash to buy Bitcoin as soon as possible.
Yeah, so now let's map Bitcoin's trajectory onto the Doge story. Explain, yeah, where you think we are in the comparison with Bitcoin.
Yeah, I think we're at the tail end of the rotation phase,
But wait,
which
are we
means
before the first mindfuck, as you called it,
yeah,
or
I
after?
would say we're probably starting the first mindfuck now. Yeah, is what I would imagine. Because what I think, of course, we need to understand with Bitcoin, the scales. Bitcoin is already a much bigger coin. I'm not saying it's going to 100x, right? It's already a much bigger coin, and I think the movements are going to be slower. It's not going to be like 2 weeks for 10x. So, but I could see something like a first mindfuck goes to like 300, 400K in let's call it 3, 4, 5 months, and when that happens, I think people absolutely lose their minds, because even as I stand here right now and I talk to you, you're probably thinking I'm insane talking about 300K in a few months, and or 400K in a few months, and the chat probably thinks I'm insane, but I think it's actually very possible. And once people see that, right, I think there's gonna be this collective, everyone was expecting, oh, retail will come in at 100K, but 100K is not, it's just 2x what we had, before. I think when people see a 3, 4x in a few months, I think they're gonna lose their shit. Yeah, and which means at that point, we can start seeing the kind of second, absolutely crazy, overblown, over the top rally that will come later.
Yeah, honestly, just everything you described with the Doge story and your hypothesis about Bitcoin, it reminds me of how so in the Doge example that you gave in your piece, you had the price chart, and you had it for like each period of time, right? And so when you look at the second mindfuck chart, then the first mindfuck you can't even see it, like
Yeah,
um and uh and so yeah, because like when it goes to 70 cents, then zero point 0.8 cents to 8 cents, it's just like
it's nothing,
not.
right? It seems, yeah,
Yeah,
it
and
looks like nothing.
yeah, and we've seen that before in Bitcoin, like if you think about people who got in like 2011, and then it went from like 2 to I think like 31, and then sorry, it went to, I don't know where it started, but it went to 31, and then it dropped back down to 2. And then even in 2013, there was like another little run where it went to like, I forgot, like 400-ish, and then it dropped back down. And then at the end of the year is when it crossed for 1,000 for the first time. And then of course, and then it keeps going, it's like, then the next run was the 20K. So all of these, if you look at where Bitcoin is now, like, yeah, maybe you could see that spike to 20K. Well, probably you could, but like the 1 to 1K is like probably really
Yeah.
small, and that, yeah. So I did also want to ask though, so like with Bitcoin, you keep saying like all these people have left. Just like talk a little bit about who you feel like the buyers used to be, and like and then also talk about like why you think they're selling now and how we get to the 400K, because that, yeah, you're right, that was a number that I took notice of.
Yeah. Yeah. So who used to be Bitcoin buyers? Actually, I think in the last bull market, let's call it like 2021-ish, I actually think Bitcoin did not have as many retail buyers as it had in cycles before that. I think a lot of people went straight to ETH, maybe even some of them straight to Solana and Avalanche and other stuff. I think a lot of people onboarded through NFTs, for example. There was this kind of NFT bubble, and a lot of people bought ETH in order to buy NFTs, and they completely skipped Bitcoin, right? And I think there was a lot of that. I think there was actually not that many new retail buyers. There are some, but if you compare that to how many retail buyers other coins had, I actually think it wasn't a ton. And I don't know if this time it's completely different. I still think that there's not a ton of retail flowing into Bitcoin. There's some, but I think it seems to be mostly institutional capital. One is through the Bitcoin treasury plays, like we said, and the other is just through the ETFs. And both of it seems to be mostly institutional capital. Uh, you do see retail interested again in doing stuff like, and by the way, that's another thing I think crypto kind of CT is missing completely. A ton of people now can go with a Robinhood account and leverage trades on either Bitcoin or some of the Bitcoin treasury companies through buying call options, basically, which is something you couldn't do before. So Americans in the past did not really have exposure to leverage in the way that the rest of the world does. Now you could, go get a VPN account, get I don't know, a KuCoin account without KYC or something. And of course, a lot of the crypto native people did that. And today people can do that with Hyperliquid, with a VPN and so on. But that's a niche thing. Most Americans don't do that. But a lot of Americans, I don't know how many, but it's definitely more popular, especially within kind of the younger generation of traders to trade options. And you couldn't trade options on Bitcoin up until, I don't know, a year and a half ago. You just couldn't do that. So there's like this new generation of retail that is leverage trading Bitcoin that they couldn't before. So that's one thing. But mostly it's obviously mostly institutional. And all of that did not exist before, right? Before that, in the previous cycles, we would have people talking about, oh, you should go to, I don't know, Strike and Swan or whatever, buy some Bitcoin and move it to your cold storage. And you don't hear any of that anymore. People aren't even talking about this stuff because that's so much smaller. Like, of course, people still do that. I'm not saying I do that, but a lot of people don't even, most of the new buyers are not like that at all. And they're not interested in that. They just want to have some IBIT in their brokerage account and maybe options. So I think the retail picture changed pretty much completely. And of course, the institutional went from 0 to 100 in a matter of a few months. So it's a completely different landscape of buyers.
But do you see like additional changes that get us to the 400K, or do you think that's enough? I can think of a few things, but I don't know the exact timeline of the rollouts for some of them.
So I don't know, of course we're gonna have stuff like you're gonna be able to buy Bitcoin on your bank account. Obviously, that's coming. I think it's most banks have been pretty clear they want that. So at this stage, this is gonna happen. I think there's, it's probably going to become more acceptable to have Bitcoin in your retirement account and stuff like that. That I think people are going to, like portfolio managers are going to start advising people to do that. So I think we're going to see much more of those kind of things. But also, I guess the point that I'm trying to make with the article is we don't need to accelerate in order for the price to go much higher. If we keep the same pace of inflows, the price is going to go much higher because I think we've already worked through most of the old sellers. I think most of who wanted to sell already did. Not everyone, but I think most who wanted to sell at these levels already did. So you don't need like to accelerate. You don't need like to the inflows to double or 10x in order for price to go much higher. In fact, if everything stays the same, we probably just go much higher just based on that.
Yeah, I mean, but I could see demand really going up, like things like the Schwab announcement that they're going to offer spot trading, and this executive order to allow crypto in 401ks. Like all of those things, I think will turn the spigots on. Like even if you think about Rick Edelman, who is a well-known financial advisor who is seen as like a guru in that world. He was saying for an aggressive investor, he could see advisors recommending a 40% allocation, which is obviously well beyond the,
Right.
forget what they were saying before, maybe 5% or something. So, I do think like obviously once that rolls out to hundreds of millions of Americans and to other, people in other jurisdictions, like, yeah, of course, that's going to catalyze things. I just don't know on what time frame, like 400K by the end of the year. That personally seems a bit optimistic to me, but you said you think it might be conservative. I did want to ask you though, because so everybody's talking about how the public treasury vehicle trend is kind of trending toward a full blown mania, which, even today there's like new announcements. It's like Athena, another Ethereum one like that. So, even like months ago, we were seeing people saying that they could see this ending badly. And that was when the craze was a lot smaller than it is now. So I wondered, do you think that these types of companies could blow up? And we can just focus this conversation on the Bitcoin holding companies. And if so, do you think that would hurt the price of Bitcoin, and how much?
Yeah, that's a great question. So could they blow up? Of course they could. I would say most of the risk is in the newer ones, because what's going to, MicroStrategy, actually, if you look at the data, if you look at their balance sheet, they're extremely healthy, extremely healthy. They took a bunch of debt, years ago when Bitcoin was much lower. They bought Bitcoin with it. Now, I'm hearing people saying that they'll blow up if Bitcoin goes down. I mean, maybe if it goes down to 5K. I mean, what are we talking about here? Like, is they, because they really, their balance sheet is very, very healthy. So I think it's a little hard to imagine. Of course, one thing that might happen is that MicroStrategy start accelerating here, starts taking more leverage in much bigger quantities. But so far they have been, I would say, to my untrained eye, they seem to have been relatively responsible with it.
Yeah, I would
But
think out of all the companies, they have the least need to finance their Bitcoin purchases in risky ways. I would
yeah,
say, yeah, some of
but
the other
but the
ones
new
are.
ones, if they want to
Exactly.
compete, and everyone's looking at MicroStrategy and saying, I don't remember how much do they have, 500,000 Bitcoin or whatever it is. Everyone's looking at that moving target that keeps growing, and they're saying, how do we ever get anywhere? I mean, they're not going to get there, but how do we outperform strategy?
It's
So
now
in
at
order,
607,000, it's really 608,000.
yeah,
It's just shy of that.
yeah, it's crazy.
Yeah.
So people are like, okay, how, and new companies are like, how are we going to outperform those guys? And I would imagine that a lot of them are going to try to outperform by just taking a lot of leverage and taking a lot of risk, and some of them will blow up. It's very possible that some of them will set themselves up in a way that they cannot even withstand, or whatever, a 30% drop, which we all know is very normal in Bitcoin. It happens all the time, and so I'm sure we're going to have some of those blowing up. But what does blowing up look like? Okay, some company raised, $1 billion. They found some creative way to take a lot of leverage on that. Now they're blowing up and they're forced to sell, I don't know, 80 cents on the dollar. Okay, well, first of all, Saylor is going to want to buy them out, right? Now, he's maybe going to do it at a price that their investors are not going to like, but a lot of people are going to want to buy that out, right? So like, I'm not even sure that immediately all of that Bitcoin goes directly to the market. But of course those things can and will happen. I guess what I'm saying is people need to understand the scale, right? I think Trump Media announced today they acquired $2 billion worth of Bitcoin. That's awesome. MicroStrategy does that in 2-3 weeks, right? So, okay, let's say those $2 billion go back into the market. Okay, so MicroStrategy buys them out in a month, 2 months. That's the scale we're talking about. So I don't think it's as terrible as people make it out to be. I think it's a lot more dangerous with the other treasuries of other coins that are not Bitcoin, because especially the small ones, because what you get with Bitcoin, it's almost kind of easy. If you start a new Bitcoin treasury company, you don't have to think too hard. You just buy as much Bitcoin as you can, and you are assuming that Sailor is going to keep pouring capital into Bitcoin. The ETF buyers are going to keep pouring capital into Bitcoin, and the new kind of small companies just kind of ride the wave. But if you want to do one with, I don't know, if you wanted to start a Cardano treasury company, then you would need to be the Michael Saylor of Cardano. You would need to do all of the heavy lifting yourself, and that's
Yeah. But
not
I think
easy.
Cardano was thinking about buying Bitcoin.
Yeah, yeah. Because as I said, that's a very easy thing to do.
All right. Well, so I did want to ask, I mean, you kind of started to talk about this, but it's funny because so the last section of your essay is about altcoins, and you wrote, your altcoins are fucked. Most of them, most of them will not be able to keep up with the sheer amount of capital flowing into Bitcoin. So explain that thesis. Actually, but no, before we do that, I did also want to ask you because this fits in. You also had especially spicy words about Ether, and you said the biggest loser of the cycle will probably be Ethereum. MSTR cap probably flips Ethereum market cap. Ethereum will literally fulfill the prophecy there is no second best, as it leaves the number 2 spot and gets replaced by MSTR. You said it's cute that ETH holders are starting treasury companies too, but they won't be able to catch up this cycle. So obviously this is very spicy. So explain the altcoin thesis, but in particular, why you single out Ethereum.
Yeah. So, I think that we've always seen this whenever a new narrative comes up. Obviously, everyone else in crypto is going to try to do the same, and that's smart. That's what you should be doing. I think that what people are going to be maybe a little surprised by, and I said that in the article too. All of these altcoins are going to have periods of outperformance. The article said that. There's obviously Bitcoin is not going to outperform for the entire time as in a straight line, and especially when you find like things that you can copy, like the treasury companies, there's going to be like a repricing. But I think that what's going to continue is that basically most of these coins are going to keep printing lower highs. So they're against Bitcoin, not against the dollar. So for whatever reason there's some momentum in other coins, you're going to see them going up sometimes violently. But the thing that I think Saylor has proven over 5 years is that they're just going to keep buying, and I don't know anyone else who's proven that they can keep doing that in such a velocity for such a long time. So you will see for sure you'll have a month and 2 months and whatever of other coins outperforming Bitcoin. But the question you got to ask yourself is, are they going to be able to keep up with inflows of billions of dollars every week for that long enough to be able to compete? And I just don't think I don't think it's going to happen this cycle. And one of the reasons is, even if I think Bitcoin worked through a lot of the sellers already. Like we've already had that very long, despairing period of time where Bitcoin tries to break out and fails. We've already been through that. I think a lot of people already sold their Bitcoin bags. I think other coins have a lot of old holders that are waiting to sell. A lot of old holders. So they would need, again, I'm talking about big picture here, not about like a day to day or week to week thing, but big picture. I think, for example, Tom Lee and Joe Lubin, I think, are doing an amazing job in the last few weeks with kind of explaining Ethereum to an institutional mindset. And that's fantastic. I think it's going to take a while to work through all of the old holders that haven't sold yet. And that's something you can see, I think, with the Ethereum community compared to the Bitcoin community. There's not many new faces in the Ethereum community, and a lot of the old faces are still around. That is not the case in Bitcoin. Bitcoin is, I mean, you can see the rotation in your own eyes. In your own eyes, you can see how so many people are new and so many of the old people are quiet. In Ethereum, that's not the case yet, and I think it's going to take a time to buy out basically a lot of the old holders and allow a rotation that eventually, in my opinion, maybe next cycle will allow Ethereum to really blow up. And again, I'm not talking about, people. I think people think in terms of like a 2x or whatever. I'm not talking about that. I think Bitcoin is going exponential. I think the other coins are not going exponential yet, and I think some of them could next time, but we still have a lot of old holders to work through.
Yeah, yeah, you wrote in your piece about Ether, the problem is that the old bag holders are still around. But Ethereum obviously is younger than Bitcoin. It's going to have
Yep.
its 10-year anniversary next week. So who knows? It may maybe in a few years we'll be saying something different. I do think one other piece though is like, Bitcoin has a much simpler narrative and investment thesis, whereas for things like Ethereum or Solana, there's other factors. And I do think like usage on the network kind of will have a factor, or like developer activity. Like there's just, it's kind of like more of a combined tech and monetary play. So it's more
I
similar
love
to
the
investing in a
stablecoin
company.
story. I love the stablecoin story. I've heard Tom talking about it a few times. I think it's very simple and easy to grasp and understand. Just saying, okay, stablecoins are. I think I've seen him and a bunch of people saying you can position Ethereum as you can position stablecoins as the Chat GPT moment of crypto, and I think that's a good, you know, that's a good
Yeah.
sound bite.
Yeah,
And
I do think though, like if we were to imagine that we're in like 1998 and we're evaluating gold versus like Apple stock as an investment, I think it's just apples and oranges, right? Like I think a person in 1998, the gold thing is a little bit more easy to grasp, obviously similar to Bitcoin. Whereas Apple stock, like, 1998, like none of us knew what was going to happen with Apple. If I
yeah,
remember my first, what did they call those? The little Macs that were colorful, like Mac Mini, or I forget what the name of that was, but
the iMac.
and yeah, maybe, and then it had a handle on top, and like anyway, like, do you know what I'm talking about? The colorful ones.
Yeah,
Yeah, I think that was like 2000 or 2001. So anyway, all I'm trying to say is like, a person in 1998 would have a hard time being able to really understand like what might happen with Apple and computers and laptops, mobile phones, iPads, the internet. Like they wouldn't be able to predict all that. And so like deciding to put your money in Apple stock in 1998 versus gold, it's just like a harder thing to wrap your mind around. So that's another reason why I just feel like the simpler narrative for Bitcoin will also help it and distinguish it basically when it comes to these treasury companies. So
yeah, and I think the 1998 comparison is actually, in my opinion, a really good one, and here's why. And like I said in the article, I don't think that altcoins are dead. I think they're going to have their moment. People are saying that it's alt season now. I don't know. You haven't seen alt season if you think that's alt season. Like I think they're going to have their moment. I just think that will need time to happen. I guess the point of my my article about Bitcoin, the biggest and most important message I can give people is about the urgency. I think this is going to happen imminently. I think like we had time. I think we're out of time. I think this is it. And this is so it's not like if when you're looking at Bitcoin, Bitcoin is not in the stage of buying tech stocks in 98 and waiting, a decade or two to become filthy rich, which could happen in my opinion in crypto outside of Bitcoin. I totally agree with that. But with Bitcoin, we're not talking about like a 10-year thing. I think this is a very, very imminent thing. Very imminent.
yeah, we'll have to see. We did recently run an article where we talked to some stock analysts, and they were using more like technical analysis, but they were saying they felt like we could reach 135 this quarter. And then like they were saying 168 in 2026. So very different numbers from your numbers, but
Yep.
we'll have to see.
We'll see.
Anyway, Udi, it's been great chatting with you. What are your handles?
Man, good luck typing Udi Wertheimer on Twitter. You can find me through Taproot Wizards. Maybe that might be easier.
Okay, great. Well, thank you so much for joining us today. Thanks so much for joining us today. To learn more about Udi and his Bitcoin thesis, check out the show notes for this episode. Unchained is produced by me, Laura Shin, with help from Matt Pilchard, Brian Ivanovich, Pam Majumdar, and Marka Kuria. Thanks for listening.